The Little Eva DFS was completed in 2012. That's a long time ago now, and hindsight is an amazing thing. What it would seem is that the costing for that study was done essentially at the height of the mining boom. Things have changed. Shareholders would be aware of that. And the opportunity came to be able to go back out to market and reprice and recost the major inputs into the study. So what we did is we went out to market, we made market inquiry, we engaged the same engineers as last time and got new numbers for the DFS. The major points of difference between this DFS and the previous one are the changes in cost inputs and exchange rates. We have seen a major fall in mining contractor costs, engineering costs, and other assorted inputs, including labour, into mining projects. We have seen a fall in exchange rate. We've seen change in smelter charges for the worse, and we've also seen changes in the outlook for copper prices. But the net result of all this has been a major improvement to the project economics. We've seen the capital cost fall from 320 million to 294 million. We've seen the net present value of the project increase dramatically from 252 million to 346 million dollars. This is a significant project with great looking returns, and that is emphasized by also the rate of return, which has increased from 22% to 29%. We now have a much more robust and attractive project. The next steps for the project are to get the thing built, to let shareholders see value. Shareholders will be aware that we've been pursuing that path for some time. The key is to find a partner who will invest in the project such that the call on funds for the Altona shareholder is minimal. Now that we have much more robust economics, clearly the project is much more attractive to an investor. We've been engaged with parties in China and elsewhere for a number of months. We have a number of parties in data room. We're discussing structures by which we may bring people into the project, and investors will understand that until some of these things are complete, it's very hard to talk more about them, but I am growing more confident that we will see a transaction that will bring value to the Altona shareholder. The other things that will happen next are that we have rebuilt the geological model for Little Eva and its satellite deposits, and there'll be a new resource estimate. It may not change dramatically, but it will be a much more confident and better founded estimate. We have made no attempt to build in the new lower mining costs into pit optimizations, and there are many other ways in which we can optimize the project. However, we are unlikely to spend that much money on the project until we know it has a partner that can deliver an operation. Until then, we will hasten slowly. The highlights from the half-yearly results, I think, are very straightforward. The first is, this is the third half year in a row that Altona has reported a profit. We are a company that's been through the construction, finance, ramp up and production largely without incident and making money. At the same time during that half year, we repaid half of our debt. This is a company with a robust balance sheet and a profitable, strong, de-risked operation. I think that's the first thing you take away, is that the strong balance sheet, the profit result, all indicate a company that is performing well. I think the other thing that you take away from the balance sheet is that the revenues are growing. For the half year, I think we reported something like $42 million worth of revenue, implying quite a good outcome for the year. And in that half-yearly announcement, we announced an upgrade to guidance, the second for this financial year, to around 10,000 tonnes of copper or 10 or 11,000 ounces of gold. If all goes well, I'm hopeful that that will be an easily achievable production target. Again, the operation is showing it is outperforming its expectations. So we're very, very pleased at these results. I think they show we have a quality asset in Outokumpu. What I think the people can take away from that is, in Outokumpu, we delivered what we promised. And in the case of Little Eva, again, when we promise that we're going to do something with it, we hopefully will be capable of delivering. I think the copper price is very interesting. It's almost bipolar. In the last week or so, there's been weakness, short-term weakness in the copper price, and it's very much influenced by the noise in the news and markets, daily movements in China and similar things. However, at the same time, there's been a clear pattern in professional forecasters, large banks, all saying the same thing. We have major international research houses now pointing out a long-term copper price, that's say 3 years out, at nearly 8,000 US a ton, say 360, 370 US a pound. That's a very robust price. The consensus in the market is around $3.10 a pound for the long-term price, and it's all based on what is a clear structural deficit in copper supply versus demand that is emerging in the next couple of years. The mining boom built new supply. There's no more coming. There's no more. There's a capital strike. No one's building new mines, yet demand keeps climbing year on year on year. Copper in the short term may be a little challenged. It'll be up and down, but in the long term, it's a surefire bet. In terms of Outokumpu, obviously it affects day-to-day profitability, but in terms of the long-term future of that mine, and if Little Eva is built, there'll be very profitable operations if copper prices up at those long-term forecasts of $3.50 a pound or more.